All right, welcome back to Stock Tricks with Nick for this week's Breakout Watchlist from June 13th to the 17th. Now, given that the market broke through support on Thursday and Friday with the high CPI numbers, these setups are more to gauge the market health than to actually trade. Basically, if I'm going to trade anything, it's going to be these 8 setups. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Here are each of the stocks that we're going to be covering in more detail in just 1 second. The first stock that I'll cover is Bumble, BMBL. As you can see, the stock's in a major downtrend, so Nick, why are we talking about this? On March 9th here, it had the highest volume ever on a day where the stock was up 41.9%. That's when this stock got on my radar. We did see a little bit of a pullback as the market pulled back in, and then as the market pressure lifted, we rallied back up to this $30 area. You can see nice tight price action through here. I tried this a couple times through 30, got stopped out for a 1 to 2% loss a few times here. And then eventually, as the market rolled over, this rolled over as well from 30.50 down to 17.62. But once again, when they reported earnings, this time 115% earnings per share growth year over year, 24% sales growth. We had another high volume day up, 26% that day. We rally eventually back up to the pivot of $30 and break through that area on June 2nd. From that point, the next day we pull back into 30, but we never break under 30, so it's showing that area is being holding as support. We had a couple days follow through, but again, with the very poor market on Thursday and Friday, we see Thursday's action. We pull back into the 8-day EMA, close right on the low. And then Friday, we actually did pierce $30. The low was $29.82. But this is pulling back on lighter than average volume. You can see the 50-day moving average of volume right here. So what I would like to see from this, if market continues to deteriorate, the stock will pull back. Well, this is the plan. Pulls back to the rising 21 EMA, kind of builds back under $30, and then breaking over 30 with the market improving might be a potential entry point. Or if the market's strong on Monday and Tuesday, again, I'm not going to be aggressive trading on the long side, but holding this $30 area, if the market is strong itself, is something that I'll be watching for Bumble. Next, we have an oil and gas name, EGY. This is the 5th strongest group in the market out of 197. So A+ group strength rating, has a 98 overall earnings per share rating, which is very strong. B+ accumulation distribution, meaning many of the heavy volume days are coming on up days versus down days. The stock's being accumulated, not distributed. Overall composite rating of 99, individual relative strength rating of 99. Both of those are very strong. You can see strong fundamentals, earnings per share growth over 100% the last 4 quarters year over year. Sales up 73% the last quarter, and after-tax profit margin improved by 31%. Within the group of 16 stocks, this is number 1 on earnings per share, relative strength, and overall composite basis. We do see fund ownership increasing from 46 in March of 2020, and then a year later up to $90. Looking at the chart here, you see a nice cup, and then lately we've been pulling back into $8. On Friday, we actually closed up 1.7%, showing great relative strength compared to the market. Market was down 2.8%, I believe. So with this continued market pressure, we want to see if this $8 area holds, or at least the low of the day on Friday, which was $7.72. If market pressure gets relieved, we can take the trade with break over Friday's high, $8.18, and then use either the low on Friday or around $8, $7.97, something like that, as a stop loss to keep a tighter entry point. Next, we have a solar stock, ENPH. We'll cover JKS as well, so there's a little bit of a solar theme. That's what I noticed on Friday. These stocks were holding up a little bit better than the market. ENPH was still down 2% that day, but as a group, it's something to keep an eye on. So with this, we put in a low for the year in January, and then we put in a higher low, and then we did shake out here to 128. But while the market was putting in lower lows, this was putting in higher lows along the way, so a subtle sign of relative strength there. Eventually, we break over the 200-day moving average on the 26th of May, rally over $200, and with that continued market pressure, Wednesday, we closed near the low of the day. Thursday, we closed near the low of the day. And then Friday, we actually closed in the middle part of the range, right 40% within the daily range, which is a good sign, right on that 8-day EMA. And we did all that pulling back on lighter than average volume, which is constructive here. You see this 192 area where that was a previous resistance, once, twice, 3 days, before eventually breaking out on June 2nd. We're pulling back into that area, and both on this day, on the 3rd, The low of the day here was 190.20. The low of the day on Friday was 191.60. So if we're looking for areas of support, I'm going to be looking at that $190 area. So market continues to be weak. We're looking for support at 190. If it's strong, we should be looking for the stock to break out over $200. Next, we have H&R Block, and I didn't think in 2022 this would be a potential leadership stock, but you cannot ignore this type of volume breaking out into new highs while the market's pushing new lows. So great relative strength and continued days of closing right at the high of the day with massive volume, 1, 2, 3, nearly 4 times in a row. That's showing accumulation of the stock, not distribution. And when a stock's breaking into new highs while the market's making new lows, that's something that you have to have on at least a general watch list. Similar to ENPH, we're looking for whole numbers that's going to support a pullback here. You can see on Friday, this was down 0.9%, 0.87%, while the market was down much more. And the low of the day was exactly $35. We haven't tested $35 after we cleanly broke it on June 1st. So this area will be a key area to hold come Monday. Next, we have the second solar stock, JKS. This was on the breakout watch list last week along with ENPH. And last week I really focused on the weekly chart and looked how this base mirrored the previous base. You put in your initial low, a higher low, and then a second kind of shakeout low that takes out, or a third shakeout low that takes out the second low. Exactly what we're seeing here. And then a pivot, breakout, and then rally. Last time it rallied for 4 straight weeks. Basically every single day it was up, made a nice 100% move while the market conditions improved. This time, going to a daily chart, this looked like it was ready to break out, but without the M factor, the market factor, this type of market pressure selling, you're not going to be able to rally 100% with that type of backdrop. But what I like to see, early on in the week, we gapped up 7.98%, 8% call it. And then we put in double inside candles while we consolidated that move. And then unfortunately on Thursday and Friday, as the market really dropped, on Thursday we closed at the low of the day, breaking under the 8-day EMA, down 6%, but on much lighter volume than average here. And then on Friday, we hold the $60 spot, which had been the pivot throughout here. So we hold $60 and we actually close up 0.7% while the market was deep red. It's a great sign of relative strength. And we did so on not higher than average volume, but higher volume than the previous day where we closed lower. So market weak, we're looking for $60 and the rising 21 EMA as a potential support. Market strong, we want to see a break over Friday's high, which would be 63.35 as a potential entry for JKS. I got 3 more stocks to cover, but first, if you guys are enjoying the video, please leave a like and subscribe to my channel. I make breakout watchlist videos like this every Sunday, along with other trading videos. With that said, let's get into our next stock, SWAV. Similar to Bumble, this had a highest volume trigger, HV1, highest volume in the past year on June 6th, closing just under the declining 200-day simple moving average. The next day, we got follow through, but closed again right on that 200-day moving average. Wednesday, we pushed through that finally. Again, higher volume. Thursday, while the market was weak, we closed right back on the 200-day moving average on increased volume. And then on Friday, this stock was actually up 2%, bouncing off the 8-day EMA. That's right where the low was on Friday. And we closed over the 200-day moving average, closing in the 91st percentile of the daily range, while QQQ closed right at the low of the day, SPY closed right at the low of the day. This is flashing signs of relative strength and staying above all the key moving averages, the 8, the 21, the 50, the 200-day moving average with that high volume trigger. If I'm going to take any trades in this market, it's going to be stocks that are showing relative strength, especially the last 2 days. So SWAV, if the market's weak, we want to see this kind of hold either at the 200-day or the low of the day on Friday, which was 179.18, right at that right at that 8-day EMA. And then if the market's strong, we should be taking out Friday's high, 189.82. Call it 190 there. Next, we have SWIR. This is in computer networking, 167th strongest group out of 197. So not a very strong group, but it has an accumulation distribution rating of A-, an overall composite rating of 89, along with an individual relative strength rating of 97. Very strong there. Earnings the last quarter were up 108% 88% year over year. Sales were up 60%, minor after-tax profit margin improvement. You see a high volume move closing at the high of the day, and we get continuation move on high volume closing right at the high of the day the next day, and then another push right to, going to a weekly chart, right to some previous highs through here, right around $20 to $21. I unfortunately didn't take this trade. When it pulled back on low volume to the 8-day EMA and tightened up on this day, this is a trade that I absolutely missed, but it was an A+ setup, but in a kind of a C- market. So if you see the setup in an A+ market where we're uptrending, you absolutely have to hit a trade like this with size, and you'll see a really strong move from $21 all the way up to $24, $25. But in a weak market, it was something that I still probably should have traded, but ended up not taking. But I don't chase. I let the stock rally, and then we get 1, 2, 3 days kind of pulling back, closing under the 8-day EMA. Ideally, we see, for this setup, we see a weak market continue on Monday. We pull into this $22 area in the rising 21 EMA, and I want to see that area get supported for SWIR. And the last stock that we'll cover today is UTHR. It's in therapeutics, so it's a biotech. When you're trading biotech stocks, you definitely need to trade with a smaller size because they do have that gap up and gap down potential, so you want to be able to manage your downside risk with that. Saying that, it also has slightly lower average volume, only about 460,000 shares traded a day, so it's a little bit less liquid than I would like. But going to the chart, you could see, actually let's go back to the daily chart. You could see this 216, 220 area, previous resistance once, twice, 3, 4, 5 different times. When we do push out on earnings here on higher than average volume, we stall one day right at that area, but then we do get pushed through on higher than average volume. Earnings were up 44% year over year, sales up 22%, after-tax profit margins improved 41%, so very strong there. We rally through that 220 area. Again, I'm not chasing it at this point. I'm letting it kind of pull in. And this looked like something that I was looking to trade on Wednesday of last week, forming this pivot through kind of 232 area. But with that market pressure coming in, we pulled back into 220. Now, if the market continues to act weak, this was only down 0.2% on Friday, so kind of a sign of relative strength there. If market continues to act weak, we got the rising 21 EMA. Right now, that's around 215. I want to really see this 218 to 216 area hold before we even get to 215, because that's just where the previous resistance was. Typically, you break over previous resistance, it'll hold as support on the way back down, especially if you're pulling back on lighter than average volume. This is pulling back. You see some heavier volume down days here, so not an A+ setup, but one of the only setups in the market that's kind of worth watching at this point, UTHR. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make breakout watch list videos like this along with other trading content. One more time, a big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we were using to break down each of the charts, there's a link in the description below where you guys can try it out yourselves. Have a great weekend, and I'll see you guys in the next video.